There's been a lot of talk lately about Ethereum and ETH's potential in 2021 to have an insane breakout year. I'm talking about outperforming Bitcoin throughout the entire bull run. Bloomberg just published an article and said crypto coin outperforming Bitcoin is about to see the supply reduced. Now, what they're talking about is something called EIP 1559. And it's set to go live around June or July. And it's too technical of a concept for me to explain by myself, so I decided to bring on an Ethereum expert, David Hoffman. He runs one of the largest Ethereum communities in the world. It's called Bankless. You need to follow it and get in touch with them. Link is down below. But we talk about what this upgrade does, how it actually reduces the supply, because everyone is familiar with the Bitcoin halving and the effect that that has had on price, right? There's less Bitcoin hitting the market, increasing demand. That's a pretty simple demand-supply imbalance, and the price goes up. And that exact same thing could be coming to ETH later this year. I think you guys are going to really enjoy this episode, especially if you're bullish ETH. And if you're not bullish ETH, this might change your mind. Remember, I'm not here to shill anything. I'm not here to give you FOMO. I'm just here to give you the straight facts, the data, the info that you need to capture the most important trends, trades, and themes happening in the crypto market. That's all going down right here on the Profit Maximalist Show. Be sure to subscribe, hit the like on the video if you guys have been enjoying these market updates. Let's get right into the episode with David Hoffman talking about Ethereum and the potential for a massive breakout. Enjoy, guys.
There's only one way out from here, and that's up.
David, I think you have some pretty bullish news for me, man. What's going on in your world? What's going on with ETH? How are you?
Oh my God, there's so much going on with ETH. How much time do you have, sir? Thanks for bringing me on. I'm glad to do this.
Yeah, of course, dude. It's been a little while since we talked. I kind of want to set the stage before we talk about, I think there are some major catalysts on the horizon for ETH that will lead to continued outperformance, because the last time we talked was like, what, 6-7 months ago almost? And we were back then talking about DeFi exploding, which is so clear now. But back then, it was still kind of people waking up to that. And it was this thesis that, look, that narrative, it has to eventually lead to ETH doing quite well. There's just a lot of mind share. There's a lot of activity. That's going to lead to ETH outperformance. And ETH has outperformed in that time period since, basically beginning of 2020. But now as we look at ETH over the past month or so, it's down like 20 or 30% versus Bitcoin. What do you attribute ETH not just continuing this rapid ascent? Obviously, things can't go straight up, right? I'm going to preface it with that. There's going to be pullbacks. But why is ETH not kind of performing like it seems like it should be? What do you attribute the kind of recent underperformance to?
Yeah, sure. I've always had this mental model, at least for this next bull market, where Bitcoin and Ether are just going to trade blow for blow until this bull market is over, right? Because there's no denying Bitcoin's extremely compelling value proposition, right? Like in the time of money printer go burr, what an asset that no one can print and that is provably scarce and completely finite. Like that's so easy to understand. Yeah. Yet Ether is kind of what I call the second crypto asset, which is a comment on how really, in my opinion, the only two big significant things in this industry are Bitcoin and Ethereum. And that's judged by the fees that are paid to the blockchain, right? No other blockchain other than Bitcoin and Ethereum has full blocks, and no other blockchain other than Bitcoin and Ethereum has meaningful fees paid to these networks, right? And at the end of the day, you as a crypto economic system must have fees paid to the network, because fees allow you to have scarce issuance, right? The more fees that are paid to these things, the less these things have to issue to fund security, right? And is formally baked into Bitcoin's design. And Ethereum is the same thing, but it does it in a more complicated, a little bit more roundabout, more moving parts way, just because Ethereum is an economy where Bitcoin is an asset, right? And that changes up a priority. But going back to my original point is that there's only two real crypto assets that fit into this macro perspective of assets that are competing to be a dominant global store of value asset. And Bitcoin and Ethereum are going to always trade blow for blow with each other, because of they are the only two assets fighting in that realm. The thing is, while Bitcoin is the safer, it's weird to call Bitcoin a risk-off play, but when you're in crypto, Bitcoin is the risk-off play. Sure. And for people like Michael Saylor, Bitcoin is actually the risk-off play. That is why he's buying it, because there's so much risk baked into fiat. And Ether is kind of this risk-on play. And I've always had the mental model that Ether will always generally outperform Bitcoin in bull markets because it's the risk on play. And what is a bull market other than risk on plays? And I definitely think that's true. I think Ether's flat versus Bitcoin in 2021, but overall, since the start of DeFi summer, it's been on a trend up and to the right.
Yep.
And so it's just a matter of time frames and the tailwinds that are coming for Ether, which are significant, and there are also massive tailwinds coming for Bitcoin. And like, who's to say which tailwinds are going to be stronger? But I think the market generally doesn't understand the magnitude of the tailwinds coming for Ether simply because it's a harder story to tell.
I'm so glad you said that because it makes me feel a little bit better because I spend all my time on this and I still kind of like, even if I know they're coming, I can look at the headline, I can understand the narrative. I think what you're about to tell us is going to really kind of flesh that out a little bit and help people explain, because look, the thesis for Bitcoin is easy. And even if you do have this bull case for Ethereum, it's not so simple to describe how Ethereum gains value, why it should gain value, what's the security, like how many coins are out there. It's all so easy for Bitcoin. It's all known. For ETH, not so much. So the biggest issues I've kind of labeled out. Scaling so far has been an issue when DeFi gets really hot. I think that kind of holds Ethereum back. People start wondering, can Ethereum actually reach scale if millions and millions of more users continue to pour in from NFTs, from DeFi? If it can't scale now, could it ever? I think you have news on that front. And then also, the biggest thing is just the understanding. Like people don't understand that it could be a store of value. People don't understand the cap, like the inflation rate, how supply and demand works here. What's out there? What is coming? What are these tailwinds that could lead to ETH outperforming in the short term and the medium term, basically during the entire bull run? What is coming for ETH?
Right. Yeah. So there's a lot baked in there. And I think if I do this right, I can weave a comprehensive narrative behind everything. So let's see if I can do this. Let's start with scale and fees, because fees are bad. And it's part of Ethereum's values or our goals as members of the Ethereum community we want Ethereum to be a maximally inclusive economic system for the whole entire internet. And that inclusivity is important on two vectors. One is participating in consensus, which is proof of stake, the ability to participate in the maintenance and management of the system. And that's what proof of stake does. And the Beacon chain is rolled out, that thing's chugging along. And then the other side of the equation is maximum accessibility to make a transaction on the L1 blockchain. And that's what we call scale. Like, can the average individual make a transaction on the L1? Can they actually access it? And I would say that Ethereum in this current form is not achieving that goal because the transaction fees are too high. The average Uniswap trade costs like $20 to $30. And a Uniswap trade is one of the most simple things you can do. And as we know, gas fees go up with complexity. Right. The market, and I think people are underestimating what is about to get rolled out with specifically optimistic rollups. And that is a number of key Ethereum applications are waiting to get deployed on optimistic rollups. And rollups are a way to bundle a large number of transactions and compress that down into a very small amount of data and just include that small amount of data into the Ethereum chain. And so what it does is it allows a central server to process a bunch of transactions, as does Coinbase, as does all these other exchanges. But the difference is the central server has made a cryptographic guarantee to the Ethereum L1 that it will follow the rules of Ethereum. And so even if the centralized server shuts down or begins censoring transactions or does any of the stuff that we don't like as a decentralized ecosystem, if it does any of that, then a user is always perpetually free to withdraw. And so there is no actual restriction of funds. There's only the actual access to the L2. And so the worst case scenario is we go back to the L1. Right. The best case scenario is that people all of a sudden realize that using these optimistic rollups, Uniswap all of a sudden has the same performance that people would expect from Coinbase Pro or Gemini or Kraken or BitMEX or any other centralized server, because it's running on a centralized server more or less. There's nuances to how centralized the processing can be done, but the point is you always have these same exact guarantees of the Ethereum blockchain. Your money will never ever do anything that you don't want it to do on an optimistic rollup. And so this is the Uniswap 3 version 3 hype. This is what I'm super excited about, among a number of other features coming with Uniswap v3. But it's Uniswap v3 on optimistic rollups, which people are crossing their fingers comes by the end of March? Question mark. I don't have any privileged information other than what I hear in the ecosystem, but that's why we are calling it optimistic March. Like, that's something that a bunch of the Ethereum people have been saying. It's optimistic March because we're optimistic about March. And then there are a number of other DeFi apps that most people will know that are also getting deployed on optimistic rollups as well.
I was right about to ask you, because it seems like DeFi heats up, and we did this during DeFi summer. It heats up, Uniswap volumes kind of peak, fees get so ridiculous where people are like, hold on, why am I paying $300 to buy this altcoin? This sucks. And then the DeFi hype dies. Everyone says this can't scale, and then it kind of slows down, and then it heats up even bigger again. And that's what we're going through right now. And it's kind of tailed off over the past month or two. In February, everyone was complaining about fees and saying this is just never going to work. Now, at the end of March, we could kind of be entering that level where we start to ramp up again. Do you actually think it happens in March? I know you don't have any privileged info. I know it's hard to estimate, but Ethereum upgrades, it seems like they always take a little bit longer. Is this actually going to come in the short term?
Yeah, that's a very, very good point. Ethereum software development is inherently hard to target. So I could totally see a world where we start to dip into April, and who knows, maybe even May. What we do know is that the Optimistic team put out a blog post not too long ago that listed off some massive hires to put on their team. I can't remember his name, but the guy from Harbor as the product lead, and just a number of other fantastic cryptographers, and they are scaling out their team, and especially their business development team. And so all about integrations. Cool. And the key feature about L2 and specifically optimistic L2s is that the composability of DeFi is retained on Optimism. It's not broken up, and that's a key feature of why DeFi is so awesome. And now we can express that on L2. And so what we think is the leaders behind Optimism, Carl Flores, Jinglan, and a number of other names I'm missing, is that they figured out that we are ready, and they need to start to scale out their growth team, right? And start to work with DeFi apps to get them implemented on Optimism. Yep. And so and at the end of the day, I actually don't think this is going to, the goal isn't to actually reduce the transaction fees on base layer Ethereum. That's what sharding is for, and that comes later. Right. What that does is that gives people instant trades, instant finality, instant settlement at low to no cost, or at least cost comparable to, it should be something like 5 to 15 cents for a trade, right? You're going to pay for it, and you should pay for it, because we know that the freemium model is toxic. We learned that from Robinhood. Yeah. So, depending on the size of your trades, a very penny's worth of trades. And at the end of the day, the economic activity or the desire to transact on the Ethereum L1 will still be the same. So we're still going to have economic activity, but the difference is users will be able to get to choose where they host their economic activity. Do they want to host it on optimistic rollups or other L2s, or do they want to do it on L1? And if they do it on L1, it'll be determined by the gas fees of the day. How congested is it? Yeah,
it makes me think obviously that'll get people excited if this does happen in March or April, whenever it happens, because it does allow the DeFi activity to keep growing and ETH to kind of users to keep using those applications without running into the problems that kind of keep bottlenecking this growth, the price appreciation, all those things. But the other side of that equation is there's a lot of layer ones, or ETH killers, let's call them. ETH competitors is probably a way better word nowadays. That all the money that's poured into those that have claimed better scalability, all those things, as ETH starts checking off the boxes of, look, we are scaling, look, optimistic rollups work, then that money that poured into those, they're going to say, oh shit, what are we invested in? If that's already happening on Ethereum, they already have the network effect, they already have the users, it's all the activity, it's where the tokens everyone wants are. I think there's going to be kind of two different forces that if that scalability issue starts to get solved, obviously it's going to be a long road, but I think there's two different pools of money that really flow in there. The second piece of news, Catalyst, that you have for me is one that people are probably more familiar with, but it's still not easy to understand. And that implementation potentially also makes Ethereum as a whole easier to understand. And that's something called EIP 1559. If you can, the best way you know how, what's the easiest way to describe it to someone non-technical like me, all the non-technical investors and traders out there? What the hell is this, and how does it actually help ETH?
Yeah, EIP 1559. EIP stands for Ethereum Improvement Proposal, and we could just call this a bill. I'm sure people know that old Schoolhouse Rock like episode, I'm just a bill. That's what an EIP is. And so it's an Ethereum improvement proposal to submit an upgrade to Ethereum that the community needs to approve. And the community has absolutely rallied behind this EIP ever since for like 2 years ago, I think it was first introduced. It's been like the only EIP that has actually come into like public knowledge, right? Like name another EIP that you know. Like you don't. It's just 1559. And that's because it changes many things about Ethereum. Maybe I'll talk about what the lesser known ones, and I'll finish up with the money one later. But making choosing gas on Ethereum is super cumbersome. It's like Gwei price. What the hell is that? Like, what is this, and what do I need to do, and why is this a thing? Like, why do I need to set a Gwei price to make my transaction go in? Like, then we have to talk about like, auctions for block space, scarce block space, why block space is valuable, how you have to auction that. No,
people's heads are spinning. It's
like,
tough enough just to send ETH to a wallet, make sure it got there, make sure you got the right address. That's all I want to do. That's all most people want to do.
Right. Yeah, and so what EIP 1559 does is it finds a very clever way to actually formalize what you need to pay. And so no longer do you have to like guess like, well, I think 160 Gwei is about right. Like, no, that number is actually a number in the Ethereum blockchain. It's part of the protocol. And the way that it does this is that it kind of follows Bitcoin's difficulty adjustment. And so when Bitcoin is producing blocks faster than 10 minutes, Bitcoin difficulty goes up. And that's how Bitcoin regulates how fast blocks come out. Ethereum with EIP 1559, it does a similar mechanism where it doubles the amount of block space. I don't know Ethereum block space. It doesn't actually say fixed to one number, but let's call it 1 megabyte. If we double Ethereum's block space to 1 megabyte, but Ethereum will target only 50% full blocks. And so we go from 1 megabyte to 2 megabytes, but we target only 1 megabyte full. And the reason why we can do this is because we can scale up or down in case there's a surge or a trough in demand to fill up a block. And so if Ethereum blocks are the trailing average for Ethereum blocks is 60 or 70% full, the protocol will start to increase the gas price that you need to pay for inclusion. But the point is that it formalizes the number that you need to pay. And so no longer do you have to ask the question, what Gwei price do I need to make an Ethereum transaction? That number is just filled in for you. You can accept it or not, and choose to transact later. And so that UX issue is just eliminated. Just like press button, send, it's done. Like all that other is abstracted in the background. So huge usability upgrade. And what is changing about the monetary policy is that fee that you pay, instead of going to validators, goes to nowhere. It just gets deleted. It just gets removed from the supply. And there's a number of game theoretical reasons as to why this is a more stable mechanism to make the Ethereum blockchain more stable. But really why EIP 1559 is so famous is because of this deflationary pressure that this puts on Ether supply. And importantly and intrinsically, Ether supply, the rate of Ether supply burn is a function of size and magnitude of the Ethereum economy. And so the more demand there is for Ethereum block space, the more Ether gets burned. And so we can kind of make comparison to the nation state, right? The more economic activity a nation state has, the more that local government can charge in taxes, right? It charges taxes based on economic activity. This is the same thing for Ethereum. It just does it in a much more objective and less political and less biased way. It's a pay-per-use system. Are you using this much block space? Well, then you need to burn this much Ether. And the burning of the Ether is a way to equally pay for all the people that protect Ethereum. And the people that protect Ethereum are the people that make Ether the asset valuable, especially in proof of stake, where proof of stake, the walls that protect your blockchain, is the value of all the staked Ether for proof of stake, right? And so just like in proof of work, where the walls that protect Bitcoin are how many ASIC miners are spinning and processing transactions, in proof of stake Ethereum, the walls that protect Ether or Ethereum is the market cap of all stake Ether. And so if we can increase the price of Ether by making a deflationary mechanism that tracks the size of the economy, that is good for rewarding the people that make Ethereum safe. And those are the Ether holders, right? Yeah. If you are a Ether holder and you are bullish on Ether, you don't sell it, you hold it, or you even buy more. And this burning mechanism that, again, tracks the volume of the economic activity of Ethereum is a way to burn Ether and reward people that make Ethereum safe, which are the Ether holders and the Ether stakers. Hopefully I explained that correctly.
You did. The tax example is pretty interesting, like the GDP of a country, and then the government can tax more based on, look, people making more money. That makes sense. With this upgrade, it's almost like the Ethereum protocol. Yeah, you could think of it as a tax, right? The fee you're paying, but the tax is now going, like the value is now being distributed back to the people that are actually holding Ethereum, because as you know, the same effect that the halvening has for Bitcoin, where there's just less supply hitting the market, and it's a network effect as more people are buying Bitcoin, find out about Bitcoin, understand Bitcoin, there's more demand, there's less supply. It's a pretty simple equation. Now with ETH, as the DeFi economy grows, as the NFT hype has exploded, millions of people coming in that have never interacted with crypto, bought crypto before, they're all doing that on Ethereum. And as that activity increases, this EIP 1559 is now going to burn that ETH that's being used because all these people are using ETH, and the value basically gets transferred back to ETH. Is that accurate? Am I understanding that right?
That's super accurate. And then this goes back to why I was saying the juxtaposition between Bitcoin and Ether as the two store of value non-sovereign crypto assets is so powerful, where like Bitcoin's narrative is hard cap and Ether's narrative is, you know, deflating Ether, like an Ether supply reduction. So like both parties point at money printer go burr and say, haha, but only Ether gets to point at money printer go burr and juxtapose it with Ether goes into the furnace based on the economic activity of Ethereum. Like, oh, the United States charges taxes on the economic activity of the nation state, and then they just print more money too. Well, on Ethereum and with Ether, they are trying to issue as little Ether as possible. And then whatever excess that they can generate in taxation revenue, Ethereum protocol goes into burning Ether. So that juxtaposition, I think, is really, really strong. And yeah, you're totally right. Just like add in more economic activity with all of these NFTs. Like all NFTs are just more and more artistic and cultural expressions coming into becoming digital assets on Ethereum. And then Ethereum, if it pays, you have to pay transaction fees to get that done. And that also brings us back to the question of scalability on L2s and the trap of, or the reservoirs of economic activities that those hold. And so one way to think of all these optimistic rollups are like economic batteries, where if there's too high of fees on the Ethereum L1, it will push people out to the Ethereum L2 because you're only ever one transaction day from an Ethereum L2. And then you do all of your economic activity on the L2. But when the fees back on the L1 come back down and the water level, you know, recedes and it's safe to freely transact on the L1 again, all of that economic activity that got pushed out to the L2s comes back to the Ethereum L1. And this is the core reason why I just don't believe in any Ethereum killer or Ethereum competitor, is because they don't have this. That when there's overflow for Ethereum demand and there's overflow for DeFi activities, it's not going to Ethereum killers because there isn't DeFi there. It's going to Ethereum's L2s. And then when it's ready to come back to the L1, it will. The gravitational pull that Ethereum has is so strong that the economic activity is going to, instead of being on the L1, it's just going to go to the L2s. It just makes far more sense than porting over to a completely different blockchain by going through Binance or Coinbase or some centralized exchange. It's just going to stay on Ethereum and use it because there's no meaningful difference between an Ethereum L2 and an Ethereum killer, right? It's the Ethereum killers aren't going after Ethereum. They're going after Ethereum L2s, and that's really where the fight is. And I still don't think they're going to win that fight either.
Yeah, it'll be interesting to see play out. I'm curious. We know when the scalability, the optimistic rollups should be taking place end of March, maybe April, maybe May if it's super delayed. What about EIP 1559? Does this have a set date, or is this another one of those things where we're kind of waiting, people are buying, anticipating? Like, is this actually coming out? When is it?
I don't know if it has a very specific date, but it is scheduled for either June or July of this year.
Okay.
And so there is going to be the London hard fork, and that is where EIP 1559 has been approved to go into. And so maybe we don't have a very specific date, but it's unequively happening.
Kind of sounds like DeFi summer round 2 could be on the horizon here, June, July. I'm pretty bullish on that. That should be fun.
I still think that this NFT boom has a lot of legs to run. People are saying, like, when is this NFT price mania going to come crashing down? Well, my question is how many multiples are we going to experience before that happens, right? And there's so much fundamental truth behind why NFTs are powerful. This conversation probably not fitting to fit into this podcast, but
another time.
The disintermediation of the arts, I think, is really powerful, and a lot of artists want that. And so artists are going to get pulled into Ethereum and just add more economic activity to Ethereum every step of the way.
Yeah, whether or not you agree with the NFTs, it's like the market is proving you wrong if you don't right now, and that's fine. Like, maybe you'll be right in the long run, but the NFT activity, the DeFi activity, if you're doubting it, it's like it doesn't really matter. These upgrades, that activity and these upgrades combined will lead to ETH accruing more value. And that's kind of the only thing I'm focused on. This is a pretty fun narrative trade setting up, almost an exact replica of last year, but we have a little bit more kind of pieces to the puzzle where it could actually be a sustained rally. So I appreciate it, man. For anyone listening, you guys have one of the best shows on everything Ethereum. You just had Mark Cuban on there. That was a really cool episode talking about NFTs, DeFi projects he's looking at. You had Blau on there, one of the biggest NFT artists in the space. So if anyone listening, watching on YouTube, listening on iTunes and Spotify, go to Bankless. Is it bankless.com?
Banklesshq.com, but our place that's more of a placeholder. So it's the newsletter that you really want, and then also the YouTube channel.
All good. If you search Bankless, I am sure you'll find it. They're blowing up. They have everything you want to know about ETH, and they do an incredible job. So, David, I appreciate you coming on, giving the Ethereum pill to my audience, and I think it's going to be a pretty interesting trade. I'm going to stay overweight ETH and see how this works out.
It's newsletter.banklesshq.com. That's where you can find it, and that's where all of my alpha comes out every single Monday.
Beautiful. Newsletter.hq. Wait, I'll link it. I'll link it down below. If you're listening, you don't have it. The link is right there. It's Bankless. David, I appreciate you coming on. Let's do this. Let's do this again in 6 months or a year, and we'll check back how this narrative continues to play out. I have a feeling it's going to be higher prices each time, but we'll see, man. Thanks
Cheers,
for coming on.
Luke.
So there you have it. Everything that you need to know about the upcoming Ethereum upgrade and why I'm so bullish for it in 2021. Now, sure, maybe Bitcoin does just go on this run and dominates, but with this upgrade coming, I have enough of a reason to at least hold some ETH in my portfolio. I can't give you advice. You got to do whatever you want to do. But I'm pretty bullish ETH, and this upgrade has a lot to do with it. Hope you guys enjoyed this episode. Be sure to drop a like on this video if you did enjoy it, and subscribe to the channel. A ton more market updates coming in this bull market. And also, check out the 2 sponsors that help me produce the show. Bybit, the best place to trade during the bull market. You get a discount on fees if you use my link right down below. And also Matcha.xyz, your single entry point into DeFi. If you're investing in DeFi projects, Matcha lets you save money on your DEX trades. So check them both out. That's all I got. I'll see you guys in the next video.